Hi everybody, it's Gil. It's Tuesday after the market close and a couple of wild days. Yesterday we had S&P downgrading the outlook for the U.S. Debt rating, AAA. I mean, I told my kids last night, take note of this. Of course, they're 9 and 11, and they looked at me with blank stares during dinner when I told them to take note of this because this is an eventful occurrence. Never happened in my lifetime where the U.S. has actually had its debt rating or credit rating put on watch negative or whatever they call it. But in any case, the market sold off. You can look at a chart of the NASDAQ here. Everybody see my screen okay? The picture was taken in front of the New York Stock Exchange employee entrance, for those of you asking, on the opening page that you guys all see when you come in and log on to the webinar. Yeah, it was cold that day. It was about 19 degrees. It was blowing pretty hard wind. And I remember we had to sit outside for about 20 minutes waiting for the guy, Larry Kofsky from MarketWatch.com, waiting for him to come out to take us in for our interviews. And boy, I remember having to run down to the subway below. Stairway's right there in front of the entrance of the NYSE, if any of you have ever been there, and trying to keep warm. And Dr. K called me when they said we could get going. So I think we have a recording is going. Everything's looking good. You've got the market. NASDAQ gap down yesterday, but closed near the peak. Okay. You know, one thing about yesterday is you come down for a few days and then you gap down. It has a little bit of an exhaustion kind of feel to it. I don't really see that the news that S&P put out yesterday downgrading the U.S. to watch negative really is anything anybody didn't know. As somebody from PIMCO said, they had already downgraded U.S. debt a while ago. So the market gaps down, you come down, you have this straight up move, so you're entitled to pull back. And of course now everybody wants to get bearish, and I'm not so sure that's necessarily the thing to do. I'd watch how this rally goes going up into the 50-day. Dr. K, where do we stand with the model right now?
Model remains on a buy signal. That could change if we start to see more deterioration in the leading stocks. They've held up pretty well, actually, in the last few days. But if we start to see appreciable deterioration, the model would flash to at least a cash signal. But right now, things look okay. Things look like they're stabilizing. And in terms of fail-safes, we're giving the fail-safes a little bit more leeway because we're in a QE environment. That's one of the rules that the model has adopted many months ago. So right now, I would say the worst case fail-safe would be breaking the low of yesterday's trade. That's the worst case fail-safe. But other than that, we're going to sit on this buy signal and let the market work its way through this mess. QE is still there. It's there till June 30th, and for now it looks like that we're going to just stay the course.
Yeah, and I would say on the short side, I was looking at, for example, today CRM. It was coming down on heavy volume, but after hours it's actually trading bid 132.45, so it's up a couple of bucks. They were knocking it down, but I've messed around with CRM and I'll short it, and come in and test it, and it just never really seems to want to break down. You got VMware coming out with earnings after the close. They're up at 94.56 bid. That's about 10 points, so make it 8 points higher than where it closed at 85.97. So VMware coming up and around here. For all you know, this is a new base, and if you're up here at 94, guess what? You just broke out of a double bottom formation. So maybe this thing turns and goes higher. And maybe that takes some of these other ones with it. F5 maybe coming up. APKT, Acme Packet was in a base with VMware coming out. I mean, these are all cloud-related stocks. They all seem to want to move together sometimes. But APKT is held in pretty tight. Maybe you see these things come out and move higher tomorrow. After hours, I noticed Intel right now, 20.98 bid up $1, over $1 after hours. They came out with earnings, 20.99 bid, trading at 21. So you're going to get the futures moving higher, and the market's going to turn higher. But it's not something we wouldn't expect because you've got QE out there, and it gets a little too obvious to everybody when S&P comes out and downgrades the U.S. debt watch to negative. It's already in the market. And for all we know, the sell-off over the last couple of weeks, the pull down which got ugly looking yesterday. For all you know, that's just discounting what we saw in the news yesterday. So now that's out of the way. After hours, we have Win trading up at 142.50 bid. It's already was moving up into earnings. So we had a little pocket pivot coming up off the 10-day today, or yesterday rather. Stock pulls down a little bit, moving higher today. So that's definitely out of range. For those of you who caught my Thursday evening recorded webinar on GoView, I did point out that it looked to me that Win wanted to come out and go higher, and of course that's what it did. The other play, though, the other way to play this is a stock, and for those of you who listened to me last Thursday evening, I was talking about LVS and the fact that Win looked good. The one I couldn't remember was MGM, which is trying to come out of the lows of the base, but I think LVS and Win are the two leaders here. Yesterday, LVS actually had a pocket pivot buy point. You pulled down today on lighter volume. Volume was well below average. I actually picked up some shares of the stock on this pullback earlier this morning. Came right back to the 10-day moving average at 44.62. Held it pretty well. And after hours, we've got LVS is trying to push 45.87. Win's still hanging out at 142.80. So this is constructive, and usually what happens during earnings season, everybody wants to get short. You have some good earnings announcements come out and they cream the short. So all that is to say, I'm really not messing around on the short side. I don't think that you need to either. Some other trends we're seeing here, the bonds, after you have the news again, bonds have come down. Now they may be in a position to bounce. They could rally back up on the TLT up to the 200-day moving average, because now the perception is that with S&P coming out and downgrading the outlook for the U.S. to negative. I got to figure out a quick way to say that. Dr. K, if you have any suggestions on that, let me know. But with that out there, now it puts the government in the position of, hey, you guys better do something, or S&P is going to drop you to a AA, and then all hell's going to break loose. So if that happens, that's really what Obama doesn't want to see. Obama and the Democrats, which I think they're playing politics with a lot of the class warfare, claiming that you have to raise the taxes on the rich and that's going to solve all our problems. Unfortunately, the rich are not as rich as you like to think. They don't make that much money. So if you think you're going to soak the rich and solve our budget problems, you really haven't done your homework as far as the math goes. Now, where if you look at income distribution and taxable income, if you look at the middle class actually brings in the bulk of the income. The rich bring a small percentage in, and they pay about 40% of the taxes. But watch out, people. If you have a normal average person's income, you consider yourself middle class. I think Obama and his minions are going to come after you once they figure out where all the money really is. Because if you look at tax rates for the middle class and how much they pay, anybody under 114,000 pay about 30% of the taxes, but there's a lot of money in that area, and if they decide they want to come after you, you're going to be the target. So I think people should be careful when they want to play class warfare and be envious of the rich, because you want to know something, the rich like me, if I don't want to, I don't have to make any money, and I don't have to pay any taxes, so I just go on strike. How about you, Dr. K? Are you going to go on strike too with me?
I'm right there with you on this. In the UK, here in London, there's been, the UK follows the US in terms of all these policies, including taxation, and there's a lot of disgruntled people here in the UK because the middle class is slowly but surely being wiped out, and there are some serious considerations about going forward here in the UK about maintaining that middle class, which is tenuous at best. Based on the tax rates that are targeted at the middle class here in the UK.
Yeah, and it's going to become like that here. I think they're going to start targeting the middle class, so be careful. And when Obama says he's going after the rich, he really means anybody who isn't on welfare. Anyways, the dollar is gapped down today. It held down. Yesterday it looked like it was going to rally. I still think that the potential here is that for China to come in and depeg the yuan from the dollar and send the yuan much higher, and I think also you're seeing that in the Chinese internet stocks. Let's see if I can type that in correctly. Baidu continues to rip to the upside. Sina ripping to the upside the last 2 days. Sohu is a little bit slower. That's why we call it Slohu instead of Sohu. NetEase had a pocket pivot yesterday, but it's also a little bit slower. So really the leaders here are Baidu and Sina, and they're kind of up and out of there, and they're away. But we did flag the pocket pivots down in here. Um, somebody asking Sohu earnings. I don't know what Sohu earnings are going to be, but stock was moving up. It kind of flopped out a little bit today, coming in. So we don't necessarily think LVS is better than WIN. I think the price, volume, performance of WIN is telling you that WIN is a better stock to be looking at. But I think LVS is coming around. And for those of you who listened to me on Thursday last week, I said this might be an udder formation where you have this dropout and the stock just comes right back up, gets above the 50-day, you got a couple of pocket pivots, and then it maybe goes higher. They come out with earnings, I think, on the 28th at the end of the month. But this reminds me a little bit of Baidu back here when you had the VP of Baidu said something about business slowing down, and they crack the thing, and it drops out here, turns around, a couple of pocket pivots coming up through the 50-day here, another one in here. I think this was even one right here, a marginal one. But what you see happen is it fakes everybody out. Everybody wants to get short the stock. They turn it around, and it goes higher. LVS still has strong fundamentals. We don't always base selling on fundamentals, but the way the technicals are starting to act, it looks a little bit better here. And certainly with WIN coming out and beating earnings pretty well after hours, I think you're going to see LVS go higher. But we'll see. But I do own it, so obviously I'm not biased or anything. Silver continues to go higher. I'm sticking to my $50.50 target. Maybe it doesn't quite get there, but right now I don't really see that it doesn't want to. Every little pullback in silver is just a buy. Dr. K, any insights here? It's always when silver is up a lot, people want to know where they buy it. When it pulls back, everybody wants to know if they should be selling it.
Yeah, and that's how these precious metals roll. I mean, buy them when they're ugly. Silver hasn't really been ugly in quite some time. I mean, it did have that pullback in January. And that was a great buy spot, of course, in hindsight. But we've been pyramiding this thing, and so on weakness, we're not pyramiding. We like to average up, and so you buy this thing. You can buy this thing a number of times as it continues to trend higher, and then when it bases out, you take a break. You don't have to sell it as long as it doesn't do anything wrong in the pattern. You should sit with it because it is a precious metal. I don't use moving averages like the 10-day or even the 50-day with some of these commodities because they trade in fairly wide bands. And so I find a balanced way to trade commodities is to take a little position, and then as it goes higher, you add to that in small increments. And then your average cost after the commodity has run up, say 50% or 100%. Your average cost is is a lot less than where it currently is. So then you have a nice profit in the stock, and you can continue to pyramid it should that commodity go higher. And as we've seen with commodities, some of these will rip to the upside over a period of many months, if not longer.
Yeah, and you can see we're getting these little black triangles on the pattern here. I'll make it a little bit bigger. It tells you we're up 12 out of 15 days in a row or better, and that's definitely a sign of strength. So what happens when you start to see these, any little pullback, you turn out to highs again, and you can try and buy that using the top of the pullback, like here, just above 40 as a stop, and it just comes right out of there. Now here you got a couple up here, maybe it'll pull back again and try to break out. But I could see silver trying to consolidate for at least a few days, but I think the thing is the QE is full on. It's full court press on QE, and the precious metals are showing that. So I just think they go higher. And I don't know how many times we could tell you to buy gold when it was just coming out of here, and on the pullback it's a buying opportunity. I know I said that on Fox a couple of Thursdays ago, or a couple of Wednesdays ago, or last Wednesday, whatever it was, I forget. But in any case, I know I got a harumph from Chris Cotter, so nobody believes me. I'm waiting for them to agree with me, because when they do agree with me, when I say that silver is going to 50 or that I think gold is in a very nice, right here, was when I was on last week actually, when I told them gold was in a very nice buyable spot, a low-risk entry point, they just harumphed at that because it was at all-time highs, or roughly at all-time highs. Well, now you're at even further all-time highs, and you have the gold futures today moving up to 1496. 10 right now is what you can see on my quote screen right here. So these are going higher, and the thing with gold is that it's probably just getting going. So we actually like these most. These are our primary positions. This is kind of what we're playing. Cleanest trends, low risk entry on gold, and they've been working. So we're making a lot of money on these, whereas the stocks are erratic. Dr. K, you wanted to say something?
Yeah, I think that when we've sized up these what these metals can do, and not just metals, but some of these other commodities. And when I think silver was around 20, yeah, and then you went on Fox and you said 50. When you go on Fox again, you should readjust your price point to 75. I don't think it's going to have any problem getting to 75, and I think gold certainly will pass 2,000.
So then we'll be up 300% by the end of the year, huh?
Well, we'll have to see.
So I can just let you do my thinking from now on. That'll make things easier.
Yes,
the less
the
I
money,
think, the better I
the money
do.
roll in. If it only were that easy.
Yeah. Okay. Well, can I give you my money to manage?
Yeah, I only charge a modest 50% fee.
Okay. Well, the only thing I can brag about is I bought physical silver at around $16, and I bought a pile of gold, a huge pile of gold at 300 roughly. So I'm making a lot of money there, and my accountant says I better never sell it because I'm going to have a huge capital gain on that thing. Okay, so maybe I'll just use it as money. In any case, let's get back to some of the stocks. I'm just going to go down my list.
If we go to stocks, there was comment made about commodities being old dogs, and that when the old dogs begin to bark, that's when the market's turning down. That's reference to what O'Neill said once upon a time. But
That
the
only
fact
has
is
to do
that commodities aren't old dogs. First of all, they're a reflection of the current environment we're in, and with all this QE going on, the demand on commodities coming out of emerging creditor countries such as China and India should continue on. So I don't see any interruption to the overall uptrend in commodities until something fundamental changes.
Yeah, and the term that when the dogs start barking, that refers to stocks, and stocks with poor fundamentals, perennial laggard stocks. All of a sudden, the UCD stocks start to rise higher. That's what he's talking about when the dogs start barking. You need to watch out. The commodities trend is very much intact, and I would note something I picked up here on the DVC. You know that I've noted in the past that the SLV has held the 20-day pretty well, and if you look at the DVC, my 20-day is this green line right here, and you notice that it doesn't violate it all the way until you get here. You get this, but even this, it closes below it, so that's your first close below the 20-day moving average, and technically it never violated the 20-day moving average by moving below the intraday low, which would be right about here, of this first close below the 20-day. I have that right, do I not, Dr. K?
Yeah, that looks right.
Yeah, and so what happens is it turns around and comes right back up. Now, this was on the Japanese, was that the earthquake or something else? I think that was the earthquake. It was about a month ago. It seems like it was a lot longer than that. Maybe for a lot of those people who are in it, it probably does feel a lot like it's been eons for them being in that situation. But you see that DDC, which includes, I think half of it is oil, it gets back above the 20-day, holds the 20-day line, and goes higher. Now, what do you notice here? We're seeing some of these triangles, which I call ants. And again, it tells you when something is up 12 out of 15 days or better. And we actually offer that on this website, the EFS file, .efs, Eddie Frank SAM file. It's for eSignal. You can use that as a formula download and put it on your charts if you want to have this. But what happened here is now you have this thing pulling back, and you're down into the 20-day. I think it's probably going to come off and come up to the upside and turn. Oil's pulling back right on top of the 100 level. A lot of people ask me, what do you think of oil? I'm not really an oil bug, if there's such a thing. But I think when priced in dollars and you have the dollar going lower, then it's probably going higher. You know, and we're in an unusual environment. I'm not in the mood to talk a lot about a lot of different stocks, although there are some acting okay. Most of them we've already been talking about, like Baidu and Sina and
Speaking of Sina, there have been no gap ups in the pattern. Someone brought that up. Since it's gapped up, there are not buyable gap ups in the pattern that I've seen in the last few months, anyway. Our book and website contain information on buyable gap ups, what makes them buyable, and essentially a stock has to clear a certain amount of volume and a certain amount of to be trading up at least 0.75 times its average true range. So it has to meet these certain criteria before it can be considered a buyable gap up. And then in terms of the parameters and focusing on constructive prior price volume action in the pattern, that led up to that gap up. So in other words, you're not going to buy a stock that gaps up that's in a downtrend. The chances of failure are much greater.
High jump. Somebody asked me about this. I don't know what that is. I don't really use it. It's something that a friend of ours who wrote these script files for us for our e-signal, he had that in there. I'm just going to remove it because I don't really use it. What we do like to use, though, is for those of you who let's see here. Oh, there we go. Let's play with this one. We use a 40-day average true range. So we're going to make this 40. And okay, we're going to apply that. So you can see, for instance, on AME Amatech, which is one I flagged over the weekend, or we flagged it over the weekend, your average true range the day before the gap up was 0.89, and this was a gap up of 2.66 points. So you can allow a little porosity here. See, I'm picking up Dr. K's lingo. You can allow for a little bit of porosity, I think, because you have a little bit of overhead from the left side. But if you look at this thing, it's setting up. They come out with earnings, but on Friday they guided up, and that's what set off the stock. This is a 500-something% increase in volume. You pick up a little volume. It looks okay to me to buy right here, so that looks fine to me. Looking at some of these other ones, Amazon is holding the 50-day. They come out with earnings, so again, you're going to be gambling on earnings. Apple, you notice how you undercut all these lows, and when I talked about this on Thursday, it looked to me like it was going lower, and it did actually break. But yesterday they announced that they're suing Samsung for copying their iPad and iPhone, and who knows where that goes. But the stock's on a 2-day bump up into the 65-day exponential moving average here. I'm not really sure what happens here. This is a nice undercut. You're just going to have to wait for earnings tomorrow and see what happens. But it's not like I'd be buying it. But it would have been a nice trade if you knew it was going to turn yesterday right in midair. But it does undercut all the lows in here, so it becomes a little bit obvious. And one more bounce, maybe it rolls over again on earnings, or maybe it goes higher on earnings. Apple is still a juggernaut, but I don't think that you're going to see it break real hard because at 13, 14, 15 times estimates and growing at 60-something% this quarter is estimated. I think you'll see value funds step in and buy the stock if it pulls back too much. And they will. They'll support it because they'll come in and they'll take positions in Apple if they don't already own it because they consider it to be too expensive. But I think here you have a sort of embedded support from value funds, value mutual funds that might come in and support it. So Apple is a tough short if you're trying to short it, mainly because it's so widely owned and it's so highly regarded, given the fact that it continues to maintain these strong growth rates. So I'm going to move down to some of these stocks. Arch Coal, the coals look strong and then they got weak. I don't know what to think there. They're too volatile. This is a cheesy little stock, Acacia Research. It has pocket pivots. They're losing money, but you get these little pocket pivots jerking back to the upside. Very tough stock to play. Adtran breaking down. Agrium trying to come back. Dr. K, not a pocket pivot, right? It's up through the 65-day exponential, but you wouldn't really try and buy this, right?
No, it's. I'd like to see it clear the 50-day. It looks like it's in kind of a basing pattern for a while, so I would avoid this one.
Yeah, that's my thoughts on that too. Let's look at Altera is holding up. This is like a little cup, and it's a handle. It's just waiting for earnings. I think that this comes out next week, so nothing really here that I would venture on as far as buying. The stock acts pretty well though on a weekly chart. You can look at Altera on a weekly chart here. Here's your pulls down for 2 weeks. Closes mid-range here, so you get a little bit of support on heavy volume. Then you move back up on light volume. There you're just kind of hanging out. With Intel doing well, though, Intel now bid 2110 after hours at 42 minutes after the close. 2110 bid and going higher. So looks pretty good. That's probably going to be good for the stocks. Remember on last Tuesday we were talking about how we saw the stocks lagging and that might be a problem for the market. But with Intel turning, maybe the stock starts to turn and play catch-up. What's your take on, if you're still in a buy signal, Dr. K, what's your take on using the SOX L as a vehicle to buy here, given the news?
Yeah, it's been lagging, and these indices tend to catch up with one another, provided that the market remains in a some sort of uptrend. So if the model stays on a buy signal, and in other words, the market continues higher, I think there's a lot more upside potential in something like SOXL than something like the spiders.
How about the TNA?
Well,
Somebody
the TNA
asked.
is a three times vehicle, so that's going to give. You have to compare apples with apples. So 3 times ETF. I guess Soxol's a 3 times, isn't it? 3 times it's a 3 times.
Soxol.
Yeah, it is. Okay. Well, I would say that the TNA is my favorite vehicle because it seems to go up the most during buy signals and go down the most during sell signals, provided the signal is true and not a false one that gets a fail-safe that kicks in. So I would stay with the TNA actually. The Soxol, there's a lot of wild cards that can go wrong with the semiconductors. So whereas the TNA is a bit more broad in that it's tracking the Russell 2000. So I'd feel more comfortable with the TNA.
So let me ask you a question then. With the model on a buy signal here, would you buy the TNA right here?
You could, because the model signal, when it came, the model signal was on the 24th of March, and the market right now is right about where that signal kicked in. So on a price adjustment basis, you're buying right around where the signal originally came in. So actually, the market is it's almost like it's saying, okay, for those of you who didn't buy on the 24th, you can buy today, and knowing that the fail-safe, like I said earlier, the worst case fail-safe is going to be the low of yesterday's trading action. So that would put the Nasdaq at a 27.05. If it hits 27.05, then the model is going to go to a cash signal, at least a cash signal.
So your risk is down on the TNA probably 79.47 then, which is around where yesterday's low is.
Something like that, yeah. I mean, you're not really having this is a great entry point. I think this is for the I mean, we might actually send out a note to people who did not who missed the first buy signal.
Yeah. I just wanted to go back to gold real quick because you get asked, whenever people see it go up, because they don't really want to buy on the breakout, and I know some people have hesitated and sat there, and you broke out through the level here where my little horizontal red line is. You broke out here, you pulled back. These are your buy points. Now let's see if that's 44.07 on the DGP, and you're at 46.73. Your 2 points would be 5%, so you're now over 5% extended. But you also have to remember this is a 2 times ETF, so you're 5% extended over 5% extended from this buy point. So I would think that the only way you could buy gold, if you haven't bought it already, is looking for a pullback. But it's always interesting that they'll see this and they won't take advantage of the fact that you're just seeing this breakout because I don't know what they need to see. They need to see this first, and then they wish they had bought it back here. You can't invest on that basis. Sometimes you got to just do it, Now let's take a look at same thing here. If the GLD broke out at say 141 right here, and it's now 145.93, it's less than 5% pass, so theoretically it could be bought here. But we think gold and silver are going a lot higher. So as I just said a little while ago, these things are just getting going. So if you're sitting back on your haunches and you're not stepping in when you need to, when you have a breakout and then a pullback right to the breakout level, and you sit there staring at it, you're like the guy, the baseball player up at the plate watching a big, fat, juicy fastball coming right down the middle of the plate, and you just sit there and looking at it, waiting for something better. So I never quite understand that mentality. I mean, it's right there. When that breaks out, it's right there. So on the GLD, yeah, you can buy it here, but be prepared potentially to sit through a pullback that could take you down close to the 142, 141. Okay? And I know everybody gets excited. You see it all going up, and you wish you had bought it. So, anyways, Weight Watchers is a nice, interesting stock, but I don't know. What's your take on Weight Watchers? I was looking at that. We got a little pocket pivot right here. No, not really. No,
Yeah, I
nothing
was
going
looking
on
at it
here.
when it had the had that initial pocket pivot a few weeks ago, and I decided that it wasn't quite stellar enough to suggest. It's
Yeah.
looking good, but we want to obviously keep the odds in our favor as much as possible. We don't want to. We want to be recommending the best of the best, and this is a good stock, but it wasn't quite up to the caliber
No,
we're looking
but you
for.
did have a pocket pivot right here at the end of March, and it has moved up from there. But it's, I don't know, it doesn't get me excited. Maybe I'm just kind of biased against Weight Watchers. I just remember my mom always getting Weight Watchers meals and then trying to feed the rest of us Weight Watchers meals. And when I was a kid, that just wasn't the cuisine for me. I wanted
I
McDonald's.
like the gap up. The gap up's really nice. That's to its credit, and that's
Yeah,
almost what tilted the odds in its favor. It's also been constructive after the gap up. So I mean, on a price volume basis, it's very constructive. It's just the whole picture of it is very close to being suggested. And actually, for those of you who may have bought it on the March 30th when it had that pocket pivot into new highs. For those of you wondering what the buyable pocket pivot range is before it becomes extended, it really depends on the volatility of the stock, in other words, the average true range of the stock, and also is contextual with the general market. So in this case, when it has that pocket pivot, you could be buying Weight Watchers anytime during that day, but the next day. Well, basically, you take the closing price of the 30th, March 30th, and that is I would use that as your base point. So if the next day you're buying 2% above that closing price, then you're buying 2% extended. That's generally how I work with these things. However, keep in mind that if this had a weaker close, or let's say it had a smaller trading range on the 30th, then you could be a little bit more forgiving. Say it only went up to 66 on the pattern and closed at 66 with its high, closed at its high, and you could buy it the next day at 67, and it wouldn't be really extended much at all in context with the overall pattern.
good points. Let's look at some. I brought up ACI, so coal. Buy KOL here. I don't know. I think coal had a nice move on the earthquake news in Japan because the idea was that coal was going to take over from nuclear power. But you know what? Coal is a lot more toxic than a little radiation. And we've gone over all the science behind that, which is Dr. K's expertise as a PhD in nuclear physics and chemistry. But I guess if you like the coals and you think they are going to turn and go higher, they're a commodity play. Generally, commodities are best bought, and you were looking at the DBC as being potentially buyable off the 20-day moving average, so maybe coal is buyable, but that's just a coal ETF. I would rather play the DBC, and I think it's probably buyable right here. That's my take. CMG comes out with earnings. When does that occur? Anybody know?
Well, it says, I don't know if this is right, April 21st.
No, it's probably wrong. No, it's Thursday, I guess. So we're going to see a lot of big earnings coming this week. So that's another thing that puts a wrinkle into buying stocks and taking initial positions here because you are taking on more risk. So you have to think about, that potentiality if the thing breaks down and busts wide open. So far, we're not really seeing any major blowups today. Things look pretty good. Intel coming up. iSurge was a stock that we looked at. It did have a pocket pivot, but we passed on it. Right now it's trading below 360 after hours, after earnings, but you had a pocket pivot here on a breakout. It's a little extended from the 10-day, but you also had one, I guess that would be a little extended, but you also had one here today, actually, going into earnings, but you're trading below. But it's been trying to come back up. And, of course, you've seen a lot of strength in the biotech. So 3 stocks that we like, these are holding up. Cepheid had a couple of pocket pivots, and it's holding in pretty tight. Viropharm had a couple of pocket pivots, and boom, gets knocked back in. I think, though, when you're looking at these, BPHM is a lower quality stock because it's a teenage stock. That's how I kind of look at it. Cepheid is a little better. What was that other one? ITMN, Intermune. See if I get this right.
And ENDP as well.
Same thing there. A little bit funky. I actually tend to like some of the bigger stocks and drug stocks. So pharmaceuticals that are dealing with drugs that are already in the market. Look at Mylan had a pocket pivot today. That looks interesting. But I like also Endo Pharmaceuticals. They're buying American Medical. And, of course, the stock rallied on that. It's going to be accretive to earnings. You're pulling back into the buy point down in here. So I don't know if it comes down a little bit more, but this is your first pullback to the pivot point down in here. So I don't know where it stops. Maybe it comes down a little more. But I like this story. I think these guys do a lot of things right. They have a lot of generic drugs, and they figure out how to produce generic drugs at very low costs, and so their earnings are they're expecting $1 per share when they announce, I think on the 28th. So it's pulling back, but it's possible you could step in and take an initial position here on the pullback. But the buyout runs up, pulls in, you get a little bit of momentum to the downside, but it's just pulling right back on top of this. Biogen continues to march higher. That was a buyable pullback, or not pullback, but a buyable gap up here. So I've talked about that over and over before. So it just continues higher and pushing ahead. Let me see if I've got anything else I'm looking at on the medical side. Jazz, of course, just continues to go higher. And just following the 10 days. So remember what I pointed out, I believe it was on Thursday or last Tuesday. What I pointed out was that at this point you have followed the 10-day moving average without ever violating it for at least 7 weeks. This would have been a minor violation, but you could have come right back in and buy it. But since here, it's really just followed it all the way up. So that is longer than 7 weeks. So you're using the 7-week rule here. So you're not going to sell Jazz if you own it and you're up on it. And we get a lot of questions all over the place wherever we go about Jazz. It's been a hot stock. At this point, a violation of the 10-day would be the only thing that would cause me to sell the stock if I own the stock. So, yeah, I'm kind of pushing through and looking at some other symbols here. Oh, this is an investment question. Hey, Dr. K, what do you think about ClimateGate and Al Gore?
Say that again?
ClimateGate and Al Gore. In other words, Al Gore, the whole thing.
You mean with global warming?
Yeah.
Well, yeah, I think that's just been a lot of mistaken science or cheap science that was supporting that viewpoint. But why does someone ask that? How's it?
Oh, because you had an opinion on radiation and the Japanese meltdown over there. So everybody, well, now you're a scientist. Everybody wants to know what you think about global warming.
Yeah, no, it's I have not seen enough evidence that we have a problem when it comes to global warming. I've seen some good science documents that have shown that you do get these trends of warming and cooling on the planet, and they're long-term trends. And we just happen to be perhaps in a if you imagine a stock chart, you can get these little uptrends that are, say, analogous to this warming situation we've seen over a number of years. But it doesn't, in the grand context of time, it's a little blip, and it's not statistically significant. So I've not seen any statistical evidence that would make me believe that the planet is in trouble and that global warming is an issue.
I have a lot of friends from Stanford, actually, who are scientists, who are climatologists. That's where it started. For those of you who don't know, Professor Paul Ehrlich first created the concept of climate change, and in the 70s, when I went to Stanford, he predicted that London would cease to exist by the year 2000. London, how's London doing there, Dr. K? They're still there, right?
So far, so good. I don't see, I see a lot of, people down below, milling about Leicester Square. They seem fairly content.
Okay, so it still exists then. Okay, well that was Professor Parlock. He was considered a guru, and I admit when I was in college I had that sort of leftist streak in me, and so all the students loved him. But he turned out to be as wrong as possible. But Stephen Schneider is another guy who's a big global warming guru, and you may hear his name. He's at Stanford, and I have friends who are climatologists and whose research is funded by the government. My question to them is that if the Earth, which has widely disparate temperature zones when you look at it, how do you actually determine a mean global temperature? And if you do, why is that relevant, or how is that relevant? Because you notice any policies put forth by the Obama administration or the EPA, whoever else is trying to foist that on us, talk about changes in policies that cause a certain movement in mean global temperature 1 degree this way or that. And I wonder, is that really relevant? A mean global temperature, is that a relevant term to use for something that has such disparate climate zones and temperature zones? On top of that, wouldn't it make sense if, in fact, you were trying to get a mean global temperature, then you would need to have points around the globe that are equidistant and equally spaced out throughout the globe, evenly distributed, so that you could at least have some sort of consistency with respect to getting an overall mean temperature, as opposed to the way they do it now, where you have points around the globe that are somewhat random, and they just use those and put them together to come up with an average or mean global temperature. So I think statistically, I think there's flaws in the science. And whenever I bring that point up to any of my friends who are climatologists, I simply get a red-faced finger wag that I should not dispute the science. So,
well, and of course, there's good science, and there's bad science, and there's a lot of studies that go on out there. And if you want to make a case for global warming or something else that's controversial, you can pick through those studies that support your case that might not have a statistical significance. And of course, we see this in the stock market all the time. I mean, hundreds and hundreds of studies being done to try to get that extra edge out of the market, or if you're trying to market time. I've looked at hundreds of models on market timing, and the vast majority of them have serious flaws in the way they're put together.
Yeah, and I think the same thing holds true for a lot of global warming science. But, you know, a lot of people make a lot of money off the government getting funded, and they have to maintain a certain party line, I think. So that's my take on it. And just knowing statistics, that seems to me the major flaw. And is how do you actually calculate a mean global temperature, and is it even relevant? But, you know, all that's to say that Fizzler is a dog, you know, and PSL is a dog. LDK.
Yeah, it's interesting that these all these solar stocks went up quite a bit during the fiasco in Japan, and simply in coal as well, because there was all this talk about, oh, we can't be using nuclear power, it's too dangerous. But it's a replay of 3 Mile Island, Chernobyl, and ultimately the facts of the matter are that the collateral damage from nuclear power plants is far less. I mean, it's by orders of magnitude than compared to, say, coal or fossil fuel burning plants.
Right. And solar isn't the answer. So.
Yeah, I mean, it's just that coal doesn't explode, and you don't get this immediate effect from it. Whereas nuclear power, everyone thinks about radiation burn victims from Hiroshima. It's embedded in the consciousness, but it's not exactly accurate.
Okay, we'll get off our soapbox now and go back to some stocks. Click Technologies, that would be a pocket pivot breakout. The only problem with this stock is that it must be on the come, because I don't see any earnings growth in this company going forward. I guess 15 cents is negative 17%. Next quarter they're looking to lose 3 cents a share. Sales were up 32% in the most recent quarter. That's down from last quarter, up 38%, and the quarter before that up 56%. Quarter before that up 66%. Quarter before that up 73%. So you're seeing a deceleration. That said, in the last quarter you've seen a big pickup in the number of mutual funds that own the stock. You went from 107 mutual funds owning 7.5 million shares to 173 owning 16 million. So there's obviously something going on here, and it's not evident in the numbers per se. So, even next year they're looking for, in 2012, they're looking for 51 cents. That's 50% growth, but even so, analysts have been lowering the estimates. These guys have a return on equity of 23.9. It's decent, but the composite rating is 77. And for me, I don't really like to look at anything below 85 unless it's some kind of a turnaround situation. So I don't understand the story. Do you, Dr. K?
You know, I looked at the stock today, and the picture's very pretty. The price volume action looks great on the stock. But then I look at in more detail the fundamentals, and I just scratched it out. It's definitely not a leading stock. And this is the thing about price volume. It can be very seductive, especially when it looks like this. We saw there's a lot of volume that came in today because in this stock, 178% was the volume rate because a lot of people saw the same pattern and all piled in, creating this effect. But I think the failure this is a failure-prone pattern because the fundamentals really don't measure up.
Yeah. So I couldn't really figure that one out either. I'm going to go. We always get a lot of questions about the silver stocks, the miners specifically. Our view is this: you can just blow the miners off and stop trying to figure out, what the trend is, because these things are choppy. And as we saw last week, the news that Bolivia is going to. By the way, Evo Morales is not a relative of mine, and if he was, I would probably shoot him, or I would change my last name. But he's not a relative of mine. I just want that one known. I get questions about that all the time. But you saw that Bolivia is going to come in, and they're talking about taking over a mine from Pan American Silver, which looked great on the breakout. And they just hammer this thing. Coeur d'Alene supposedly is off the hook. They do have a mine in Bolivia, but the government there assures them that they're not going to touch it. But these things just break down, and it's just much easier, much easier to own silver, and there is no buy point, and we'll let you know when we see the next buy point, when it pulls back or you have a pocket pivot. The last time was right here, and we took a position in the portfolio simulator to make a statement about what we thought about the pullback in silver, and of course that's turned out very nicely. But you really don't want to mess with these miners. Somebody was, I was reading over the weekend that somebody thinks the GDX is on the verge of a breakout. Maybe it is, maybe it isn't, but I don't really care because I already know that gold has broken out and it's in an uptrend, and so I think this is really where you want to stay. So you can avoid and stay off the silver miners. So I want to remind people that we can't give people personalized investment advice, and that's not what we're doing. We can't tell you how much money to put into a stock, whether you should use margin, how to handle your account, whether you should take out your IRA, your 401k, and put it all into silver. If you need stuff like that, you should find a broker because they'll probably give you, the same quality of advice when it comes to that sort of thing. Because I don't know how to tell other people to invest on that basis, and so I don't even think you need to really worry about it. Do things according to your own risk parameters. I still like TIBCO. I think TIBCO looks okay. It's trying to hold the 10-day. It doesn't tend to hold it, but there was some talk of HP looking at buying them out and had been in discussions with them. I do think that this whole social networking thing, at least for TIBCO, is going to be a positive for them. The stock's extended. We flagged the pocket pivot coming up through here. Somewhere in here. Actually, I think it was this one, right, Dr. K? Yeah, this one coming off the 10-day. So it's holding above that, and it looks okay for now. Nothing really to do there as far as trying to add. Under Armour, I know why Under Armour continues to go higher because they make their products with silver. There's as you may know, silver has antibacterial properties, and of course, body odor is caused by bacteria. So in case you're wondering what makes you smell bad, sometimes it's bacteria. And so I'm wondering if UA isn't going up because of that. In any case, I think it probably plays into the Lulu thing as well because Lulu just continues going higher. Now, a very good question here is whether Lulu is getting through the $100 price point for the first time. Does this mean using the Livermore rule? Remember the Livermore rule that I call Livermore Century rule, whereby if the stock gets up through the century mark for the first time, 100, 200, 300, whatever, that it should move through there decisively and continue a lot higher. I guess you could use that. If you're going to try and use that here when Lulu is in such an extended state, then you definitely want to be using that 100 level as your guide for a downside stop. It doesn't mean that it couldn't come up and flip back and forth around the $100 price level, but if you're going to use the Livermore rule and invoke it here, then I do think you need to be cognizant of the fact that Lulu is extended from the last breakout right about here, which is around the 85 level. You had one breakout, one pullback, and then you moved to new highs here. Now you've really just rammed higher, and you're going through the $100 level. If you're going to invoke that rule, then whatever you add up here, you want to use the $100 level as your stop, roughly. It doesn't mean that you might not get shaken out a couple of times. So that's funny. Somebody asking if they might announce a split and what are the rules for that. There are no rules for splits. Splits are just splits. The only rule I know of splits is when a stock has excessive splits, like 2 or 3, within a year or within a short period of time after it's had a pretty good sized run or during a big run. That can often be a clue as to a sell signal. And we can always go back to the poster child of I know Crocs had a 2-for-1 split on the way up. That wasn't really excessive, but this is probably one of the greatest short sale examples, head and shoulders pattern. But sometimes they can be a problem. Here it occurred and ran up higher. I thought there were more in it, but I guess I was wrong. But when you start to see, if you saw another one here, another one here, Dr. K, you know of any examples where you had like 3 splits right around the peak?
Yeah, there's quite a few examples over the years. The general rule is if a stock, the third time a stock splits, and if that split is at least a 2-to-1 or even a 3-to-1 split, then pay attention for a possible topping action. But that said, in practice, I'm going to rely on price volume action ahead of anything else in terms of selling, because you don't know that stock that split 2-to-1 a third time is not going to split a 4th time and maybe even a 5th time. You just don't know.
Right.
I mean, it's like the base stage example. So, okay, a stock breaks out of a 3rd stage base. Statistically, it's going to be more failure prone, but that's statistically. I mean, if the stock is a really a true leading stock, it could go up, it could break out of a 4th stage base very successfully. So you want to focus on price volume action and not get too swayed by this base stage or the number of times that the stock is split.
Yeah, so Lulu, I won't worry too much about that and whether it's going to. Deckers is trying to break out. It's a little bit sluggish. I actually bought a little bit of it, but kind of blew it off. It doesn't seem to be, it doesn't have as much thrust as Lulu. And there's a lesson here too. If you don't want to buy, like, right, let's say 3 days ago you saw Deckers and it's breaking out, and you think, oh great, 5 days ago it's trying to break out, and that looks good. I can't say that it looks bad. It may go higher. But this is kind of an example of which stock would you, okay, so let's go 5 days ago, okay, and you look at, and pretend you didn't know that Lulu is, but 5 days ago, would you buy Lulu here, given that it's extended from the breakout? Would you buy it here, or would you rather buy Deckers here because it's just starting to come out of the base? Most people would say they would want to buy this one. And there's a good reason for that, is that psychologically they view it as safer because it's closer to the breakout. And I have to admit, I do that sometimes, and I think that's a mistake, because if I bought that breakout 5 days ago on deck, I should have really just bought Lulu right here, because it just went a lot higher. But it tells you that strength begets strength, and that's a truism in the stock market, and something that you always have to think about. This morning could have gone after Cena. Yesterday morning could have gone after Cena, but it's looking like it's extended. But look at that, it just takes off. And so if you're more interested in Netty, say, which is closer to a little consolidation, or Sohu, which is coming out of a little flag pattern here, you notice how they just don't have the same thrust. And so the things that look like they're just way too high, those are the ones that continue much higher, whereas the ones that look like, oh, this is safe, it's just coming out, pocket pivot right here, or whatever this was. Because I always know, Netties was a pocket pivot yesterday on this volume signature here. And you want to come in and buy that, but it doesn't go anywhere. And that's because this one, Cena, is the one that is stronger. Baidu is the one that is stronger, and they go higher. So the one that looks safe a lot of times is not really the one to be buying. So that would just be one point I would make. And I know a lot of people right now are scared to death of buying LBS, which I think they want to short it, actually. So I'm thinking this might work, but we'll see. Tomorrow it goes up. But that might be an example where you have LBS versus WIN. And WIN has just continued higher a lot faster than, say, LBS. So keep that in mind when you're looking at stocks and you're comparing between 2 leading stocks or 2 stocks within a group. and you want to go after the one that looks like it's closer to a buy point or near a consolidation and not as far up. That one looks better or safer. But in fact, the one that's further up, such as Lulu in the retail sector, is really the one to buy as opposed to, say, Deckers. Okay. So now Green Mountain Coffee, it's just hanging out. They're waiting for earnings. This thing's probably just going to sit around until earnings come out. So Dr. K's been making a ton of money in MCP, and he's been handling the position pretty well. So Dr. K, I have a question for you. Can I buy MCP here, and where do I add, and how much?
Right, and you don't want to be adding up here. Well, if your price point was a lot lower, you could certainly add up here, just going with the trend. But you certainly don't want to be initiating at this level. Wait for the next pocket pivot. A next pocket pivot, or let's say if you had a nasty sharp pullback into this level in here, that might be a place to step in. And a lot of times stocks will break out and then pull back, but for all you know, this was your breakout and this was your pullback, and it held very nicely, held this gap very nicely and has gone higher. Notice how you're running out of upside volume, so I would be primed to pull back. I think you'd actually want to see Molycorp come back and form a little base of some type here, maybe even like 3 weeks type formation, which would be a great place to come in and buy the stock. Okay, so I think that's probably what you'd be looking for. We did have to abort, getting back to some of these commodities things, we did have to abort the JJS, crude oil, cotton, and coffee. I noticed the price of coffee at Costco has gone up. But this may just find support here, fake you out, and then turn around and go higher. Dr. K, any thoughts on the JJS? It's cotton, coffee, and sugar. There's no crude oil.
That's
that
right.
would be
Cotton, coffee, and sugar.
But JJS, it just doesn't seem like it seems like it's taking a breather right here. It'll probably go higher. I track MOO and DBA as close cousins of JJS. And you can see that there's a fair amount of correlation between those three ETFs, ETNs rather. So I think that all three of them are going to go higher, but I obviously want to be in them when there's upward momentum. And right now, I don't see much evidence. They seem kind of like they're taking a breather.
Right, and I would say on a relative basis, if you had to pick between JJS and DBA, DBA looks a little bit better.
Well,
it's kind of like
the pattern. That's a good. Actually, you bring up an interesting point. DBA has a more constructive, or it's a less sloppy pattern than JJS, but JJS overall has a higher relative strength. So if you're going just for the percentage gain, then JJS is a better bet. But if you're going for risk reward, where you're tailoring also your risk involved, then DBA is a more constructive pattern.
Yeah, I think I like DBC and I like gold still here. They look pretty good. DBC might be okay, even oil might be okay here, but there's a lot of politics that go into oil. I know, who was it? Saudi Arabia announced that they're going to be cutting back oil production. And so you're finding support right here at about the 106 level, maybe a little below that on the, I'm looking at the nearest futures contract on light crude, and so you're trading 108.28. You're holding. To me, I don't see, even with the call by Goldman last week, you didn't see a lot of selling in the futures, and you actually notice you see a lot of buying in the futures right here. Off the 20-day moving average, or right on top of this little consolidation where it breaks out. So I think it's probably likely to go higher. If you're looking at things like copper, copper's been pretty weak, and there's been talk of excess supplies in different places. But corn is acting okay. I'm just going through some of these commodities. Cotton is pulling back, and that's probably what's dragging the JJS down. Soybeans been really bad, or I'm sorry, sugar has been pretty bad. There was a lot of talk about sugar going a lot higher, but I don't know. Maybe people don't, or they're using sweet and low or something. But coffee actually trying to break out to a new high. So with what are the three? Corn,
one of them, coffee, and sugar.
Coffee is trying to go to new highs, and cotton Is that right, Dr. K? Corn,
Oh,
cotton, and
wait,
coffee?
JJS.
No.
The three things are coffee, cotton, and sugar.
Yeah, so what you're seeing dragging down the JJS is sugar, actually, sugar and cotton, whereas coffee is trying to break out to new highs. See, that's one of the things when these ETFs with commodities get way too narrow, you start to get weird effects. That's why I think you're better off with the DBA or the DBC. That seems to just prove out empirically. So let's see. I think Lyondell, Basel is doing okay. They're coming out with earnings. You had a pocket pivot, remember, in here. Would have been right about here, so it's back to the pocket pivot. Chemical company, the other chemicals have been acting okay. Eastman Chemical, Rockwood Holdings is trying to hold the 50-day. I think I like LYB and EMN best. SPRD, yesterday we had a pocket pivot on it, and you run up. They're going into earnings, I believe, coming out in the middle of May, so that's a ways from now, but you do have a pocket pivot. Dr. K, what's your take on this one? You like this company?
Yeah, SPRD, it's good enough. It's got a lot of price momentum in the last run-up, and the question is whether it can clear this current base. The fundamentals are very strong on the stock. Overall, I'm in favor of it. I think that we had a pocket pivot yesterday, and I wouldn't be surprised for it to form a little handle here, maybe go and, it needs to maybe consolidate a little bit and then go higher. But if the market's going to go higher, I believe this is going to outperform the market.
Yeah, so then you could actually buy this using the 50-day as your guide for stock, correct?
Sure, the 50-day is a good guide, because if it goes below the 50-day, then that means it's just going back into the basing pattern, and it might end up doing that for another, for some time. So you don't want your money tied up in that.
Yeah. I do want to go over to one stock that we talked about over the weekend, Momenta Pharmaceuticals. The stock, this is an interesting situation here. And one thing I want to point out is you have to be careful with the stock because they're basically a generic drug maker. They copy other people's drugs once they go off patent. And they're trying to create, I think they're in with Novartis, trying to create generic something that Teva Pharmaceuticals has. And there's a lawsuit over this. So I don't know if these pocket pivots over the past 3 days actually are telling you, these are pocket pivot volume signatures, but on Friday last week you actually had the pocket pivot. But this is kind of interesting just because it reminds me of Jazz, and I'll get to Jazz right now, but I just want you to be aware that this is kind of a news play, and if they lose the lawsuit or there's some negative development, stock could be down below 14 probably in a hurry. But I think it's interesting. So what I want you to do is take this chart right now and kind of burn that into your brain. Okay, you see a big move. Mainly what you have is a base, you have a gap down, and then it tries to edge its way higher with some pocket pivots. Now let's look at Jazz, and we'll go all the way back here. And you notice how it was trying to build a nice base here, broke down, gapped down, and then worked its way with a bunch of little pocket pivots on the way up, and then started to move out. Earnings came out and the thing gapped up and never looked back. I don't know if this is what this is going to do, if it's going to do the same thing, but they look kind of interesting in that they both had these gap downs. I think that was market related probably. But kind of interesting just to see that they're somewhat similar. But I don't think that Momenta has the same fundamental wherewithal that Jazz does. Jazz, to me, Jazz is just a generic drug maker, and not a generic drug maker, but a company with a lot of different products where they're selling them all very well. And another one I like in that same space, or that same concept of a company, a pharmaceutical company that does a lot of things well, is Endo Pharmaceuticals. So I tend to look at biotechs, pharmaceutical companies. They're all part of medical. iSurge is doing okay. Illumina. After hours, I noticed iSurge coming back up, bidding like 260. I'm sorry, what was that? iSurge. Whoops. Let's get it again. Yeah, 362. So it's coming back up after hours. But I like Illumina is another one that's trying to set up in here. It has a nice run up. It's a nice needed correction. You notice on this pullback here, the volume is drying up. Probably gonna have to wait till earnings come out. Maybe it gaps up. I think they're coming out with earnings looks like the end of the month, but it's been trying to act a little bit better. But I notice this is the group in general. I don't really distinguish between biotechs and pharmaceuticals, other than if they're showing strong group action as a whole, as an industry sector. That's generally a positive. And I think in an environment like that, it's something to keep in mind. I just wanted to point something out. I noticed JDSU has corrected some 35% off its peak. You may all remember when Finisar came out and blew out on earnings, and well, actually blew chunks on earnings and puked up, I don't know, half their value in one day. And JDSU came down, and there's some talk of the business slowing down or this area, but these guys are optic networks, and they have a lot of interesting things going on. So I'm kind of just watching this, not that I'm going to buy it, but I'm wondering if, let's see if I can find a, this thing had a real sharp upside move, and then you have a lot of volume. I'm wondering if maybe this thing is just going to take some time and build a deep cup. But I'm just kind of watching it. Maybe at some point we'll get some sort of bottom fishing pocket pivot, but for now you don't have any of the moving averages turning up. I'd watch for some of these, the 50-day to turn up, the 20-day to turn up, but a lot of people do ask about this. It's come all the way down and filled the gap, and notice the selling has been diminishing. They come out with earnings, I believe, later on, is it this month? Yeah, beginning of May, so not too long from now, a couple, 3 weeks. And for all you know, this is going to try and just come around and form a base. But I'm just kind of keeping an eye on it, because I think if you saw things like this turn around, and forget Finisar, I think that thing's done. But JDSC is still a good company. Still great earnings are expected to have 100% earnings growth in the next quarter. So it'd be interesting to see how this sets up, and maybe it tries coming around the other side. But I've always got it in the back of my mind as potentially a pocket pivot. Anyways, we're at it's 2:24, so we've been going for over an hour, and well, just about an hour and 10 minutes. So that makes up for our little political soapbox on global warming. But that's pretty much it. So you can see that your best plays are in the metals rather than the miners, and we're starting to see some things pick up in some of the growth stocks. After hours, we have VMware moving higher, and you could have a buyable gap up combined with a double bottom breakout, and that's a possibility. So I wouldn't necessarily be too shy about taking a position if it opens up in here and the volume is massive, because that could very well be the start of a new run for the stock. So I definitely would not be afraid of buying it. Dr. K, let's do a hypothetical to close up, and that is, let's say VMware opens up here at 94 and the volume is running at a couple 100% above average, 300% above average right at the opening. Are you a buyer?
That is a buyable gap up. Now, am I a buyer? It all depends on all the other factors as well. But possibly, I wouldn't say no. If everything's in alignment, then certainly it could be a very good gap up point, because
well, let's make a note of that.
Got a good construct. It's got an interesting basing pattern, and it's gapping out of that. So it might find a lot of support at that gap up and just go, sail on higher to new highs.
Yeah, and there may be a lot of shorts in the stock too. So tomorrow morning, something to watch for. If we are, we'll be watching it in the morning, and if we think it's a Bible gap up, you will probably see an alert coming through in the Pocket Pivot Review section of the website. So watch for that. This could be interesting tomorrow, and you could be in a very nice position to be buying this market and be buying the TNA. So there could be some opportunity. So, like I said on Thursday, don't assume anything about the market, because if you do, you miss out on opportunity when it's right under your nose. And as Dr. K is fond of saying, the opportunity of a lifetime in the stock market can come every couple of weeks. So you got to love it. Looks good, and that's it for now. Thanks for coming, you guys. Look for some more GoView webinars during the week if I see anything, or if Dr. K and I have discussions and see anything we think is significant. Okay, so we'll catch you guys later, and everyone take care.
So long.